What's going on, everybody? Welcome into a special weekly recap edition of the Daily Energy News Beat Stand-Up here on this gorgeous March 15th, 2025. Gorgeous Saturday. We appreciate all of you who have stuck with us through the week. If you had not had a chance to listen, we have a great recap episode lined up. The team has gone through and found some great clips from the entire week. Stu held it down for a couple solo shows. We talked about Scott Sheffield and the Tier 1 inventory. The team better put that one in this because, man, unbelievable, guys. We'll keep that, and we'll keep this intro short so you can get to it, guys. But as always, check us out, energynewsbeat.com. Thank you to sponsor of the show, Reese Energy Consulting. And as always, guys, invest in oil.energynewsbeat.com to become Billy Bob Thornton from Landman. But Stu, I'm going to kick it over to the team. We'll see you on Monday, folks.
The Strategic Petroleum Reserve. This article came from one of my favorite guys on the planet. He is David Blackman's Substack. This is an outstanding article on the SPR. And Michael, I just want to tell you that it was treasonous of the Biden administration to deplete the SPR, because the SPR, the Strategic Oil Reserve, was created in the 70s by Congress and Richard Nixon in response to the first Arab embargo. But David points out in this article, the salt caverns and the storage system cannot handle much more. It's only good for 2 to 4 in and out refills. And they've been using this as a piggy bank for votes to get the oil prices down. So let's go through some of the numbers real quick. So when you take a look at it, the SPR has a total capacity of 797 million barrels of oil, which is 33 days of U.S. consumption, but it's about 4 months of U.S. crude imports.
And I think that's a critical piece to point out, that everyone says, well, it's only 30 days of consumption. Yes, but we also make a majority of our own oil here, meaning that really what we're trying to do is make sure that we can make sure that if imports were go to zero, we've got a 4 to 6 month backstop, in this case, 4 months.
And you're having to understand that the reason that we import is to blend for our refineries because of the lack of investments in upgrading the refineries to being able to use our own oil. So when you take a look at that, Biden people desperate to mitigate losses in the 2020 midterm elections chose to draw down the reserve to the 340 million barrels. Right now, it only holds just around 395 million barrels. Now, Reuters put out that it is going to take years, and Chris Wright is looking at about $20 billion to fill this. Could take 10 years. But I think legislation has to be put in where this is no longer a piggy bank for political gain.
Well, I completely agree with you. The real question is, what does Doge think of this? Because we're trying to cut, slice and dice everything out of the budget. The question is, are you going to be able to find $20 billion if you need to take 30% of the budget and chop 30% of the budget off? Are we able to find $20 billion? I would argue we need to. The question is, where is it going to come from? What piggy bank is it going to come from? I think we'll be able to find it, but I think it'll be very interesting to see what Elon and Doge, if they're able to fit this in, because I agree with you. We need this. It's critical for both national security. It's critical for energy security. But I hope it doesn't get axed when Doge comes around to it.
It's going to be short-sighted. And so I think this is just as critical for President Trump and this House and Senate to get done, as well as voting reform. I put these two equally up there. So let's go to the next story here. You can't buy this kind of entertainment, Michael. Canada's final U.S. energy tariff warning to Donald Trump. We're filming this on Sunday morning. A snowy Mexican standoff, a snow Mexico standoff, Mexican standoff. I get tickled when everybody's calling Canada and they snow Mexico. So here's where it is. Doug Ford is the prime minister up there, and we have a lot of customers that are going to be impacted on this. Canada will enact a 25% energy flowing into parts of U.S. Ontario Premier Doug Ford said as U.S. President Trump Ford plows on with his trade war. And I guarantee you, listen to this. The 25% tariff from Ontario hits 1.5 million homes in Michigan, New York, Minnesota. It's a retaliation move against U.S. tariffs, and despite Trump's suspension of trade levies, Ontario's Premier Doug Ford is pushing ahead on Monday. This is going to affect grid reliability, and I think it's really stupid to get into a fight with President Trump.
Yeah, I do think that this is going to hurt energy prices. I do think the markets are in a little bit of they're a little bit in limbo right now with, tariffs are on, tariffs are off. We're going to do this, then we're going to do that. Really what the markets need is a signal of this is what we're going to do and we're going to stick to it. If we're going to put tariffs on, great, stick with them. The idea that they're on, then they're off, then they're back on like a high school relationship, it does not give the markets the clarity that it needs. And we saw it all last week, not just with oil prices, but with the overall markets themselves. They were up, they were down, really on the backs of a lot of this stuff. So I really hope both Canada and the U.S. can come together, come to some sort of agreement. And if that's a reciprocal tariff, 10% each going one way and going the other, I'm fine with that. I'm not anti-tariff. I am very on, off. I mean, again, it's like we're in a high school relationship here.
I couldn't agree more, Michael. And I'm going to give President Trump a little bit of room because we've had 70 years of inequitable trade balances he's trying to fix. So I'm willing to hang with him.
You're siding with Trump? Shocker. What's next?
Hey, let's Trump, baby. Let's go to the UK oil and gas, too legit to quit. The Labour government under Keith Starmer has upheld its promise to halt oil and gas exploration, but is now allowing tiebacks, connecting new reserves to existing fields. Seems like a sleight of hand here. When the Labour Party, Keith Starmer, won the latest UK elections, it vowed to stop new oil and gas exploration. But if you're in the general area and you think that there's oil, they're in such an energy crisis that you're going to see this sleight of hand coming around. With the green energy policies, we see deindustrialization. With the green energy policies, I'm just releasing the George McMillan article, and it is on, if you go to energynewsbeat.co and then go to the upper left, search for George McMillan, you'll see on there, it's called the 7P plan, how the left got here from the 60s to now. It is all part of the plan. So if you think that you're a green energy person, you're actually being manipulated. It's pretty cool to see that. The government acknowledges that changes to the oil and gas fiscal regime in recent years have led to a period of uncertainty in the sector and its investors. Treasury said in a statement, this is the UK's Treasury, that part of the consultation papers, yet another good sign for the UK's energy. They're going to stop the windfall profits tax after 2030. They're not going to have an oil and gas industry by then. They're absolutely going to go out. Oil and gas companies are going to be fleeing the UK. Staying in the UK for some entertainment, let's go to UK pivot to AI is doomed from the start. This is by David Gerard, author of the book Attack of the 50-Foot Blockchain and Cryptocurrency and Blockchain News of the same title. This is pretty funny. Government bureaucracy generates paperwork and even more paperwork when it's computerized, but human judgment is expensive. What if a computer could go through the paperwork instead? Well, I'm going to just say this right here. I like the idea. We found that Doge has gone through the United States system, but it's who is programming the AI. The AI that I've seen can be just as corrupt as people. Now, if it's a tool and it's a search algorithm, so let's say that you're Nancy Pelosi, just as an example, and you go out and you do an investment and you start going through and saying, how does this play in? AI can go through and then take a look at your bank account, cross-reference, and do that kind of stuff. but it's who's driving that you really have to take a look at to see whether or not corruption's going on. I think that this author has got some really good points on here. Starmer's press release claims the International Monetary Fund estimates that AI will improve productivity by 1.5% per year. But this turned out to be far from an IMF report that was skeptical of Goldman Sachs report making this claim. The Goldman Sachs report says that electricity and personal computers raise GDP by this much. I'm going to throw this squirrel into this argument, and that is when you sit back and take a look at the amount of power that AI is going to take, the amount of cost, the amount of development, the amount of data centers, and UK has been now urged with the left, under the left's policies, and even their right wing, supposedly conservative, have been acting like left, and they've been deindustrialized. So they are not going to have the money, resources, or the capability of implementing AI credibly. So buckle up for the UK. Your energy secretary to shatter Biden's climate shackles, unleash the US energy boom. Chris Wright is, again, the right man for the right job, and he is Chris Wright. So slam Biden's climate policies, vowing that Trump admin will prioritize energy, prosperity, and scientific realism. He characterized the Biden administration's maniacal focus on the climate change as counterproductive and impoverishing ordinary people, pledging to take a radically different approach than his predecessor by unleashing U.S. and energy private sector. The previous administration's climate policies are horrible. There are no winners in that world except the politicians and rapidly growing interest groups. The only interest groups that we're concerned about with is the American people. Our focus is steadfast on the American people and our allies abroad. Chris Wright, I absolutely love that saying. The only interest group that we are concerned about with is the American people. Oh my goodness, that is refreshing. The Trump administration will treat climate change for what it is, a global physical phenomenon that's a side effect of building the modern world. That's an interesting way to put it, and I kind of agree with it. The Trump administration is moving forward and will end the Biden administration's irrational, quasi-religious policies on climate change. And I think that this is going to be something that we're going to see in the next few months, and that is additional graft and greed and corruption that net zero, that the climate policies have done, and they've been done intentionally. Yesterday, I released the 7P podcast. It was the podcast where George McMillan and I talked about how we got here. And how we got here is by design since the 60s to turn this into the left plan, to turn this into a communist regime. And we almost failed. Hats off to Secretary Wright, and I really applaud him. You have to understand how we got here, but yet more importantly, how we're going to get out of this problem, and I believe we're on the right track. Cheniere gets the okay for 2 more Corpus Christi LNG trains. This is huge. FERC said its approval dated January 10th that it granted an application filed by Corpus Christi Liquefaction and CCL Midscale in March 2023. Man, since March of 2023 to get an approval process done? Hey, way to go, Chris Wright. Clear off that desk. The applicants are authorized under Section 3 of the NGA to site, construct, and operate the CCL Mid-Scale Trains 8 and 9 project and described in condition. This is exciting. Cheniere CEO Jeff Fresco recently commented that the company still expects to make final investment decisions to build 2 more mid-scale trains at Corpus. That's exciting. Way to go, Cheniere. And shout out to our sponsor, got to pay the bills. The sponsor of the Daily Show is Steve Reese with Reese Consulting. He let me know that with all of the things going on and the growth in the LNG and natural gas space, that there is a training issue And if your employees need training, reach out to Steve Reese at Reese Consulting, reeseenergyconsulting.com. They are fabulous. But if you are in looking to sell natural gas, if you're looking to buy or put in a power plant, you need Reese Consulting.
Here, so markets are still open, but they're up so far about a half a percentage point in the S&P 500. Nasdaq jumped about 1.4 percentage points. A lot of that's because Tesla's swinging back heavily after getting pounded the last 3 or 4 days. 2 and 10-year yields up 0.8 of a percentage point and 0.4 of a percentage point respectively. Dollar index flat. Bitcoin $82,000, basically flat. Crude oil up about $1.50 to 67.75. That's about 2.2 percentage points. Brent oil basically flat at $71, and natural gas tumbles 7 percentage points to $4.12. So natural gas guys go from happy to sad. It's a tough business to be in that natural gas game. Myself, when we go look at what's driving oil prices, it's mainly tight U.S. supplies, with the fact that we have seen crude oil inventories come back. The EIA did drop their crude oil inventory report this morning, and they said that crude stockpiles rose by about 1.4 million barrels, which was actually less than the expected 2 billion barrel build that we saw the API drop yesterday. So remember what goes on there. We also did see gasoline inventories drop by about 5.7 million barrels versus the expectation of a 1.9 million barrel draw. So pretty incredible. Distillate stocks dropped a lot more. Good friend of the show, Josh Young, said this week the oil build was smaller than expected and gasoline and diesel draws were larger than expected. This evidence stronger demand and could see oil prices rise as a result. He was right there. We did see inflation, some numbers come out after U.S. core CPI increase less than expected in February, so that's great. We have seen a pickup in the last few days of a potential Russia-Ukraine ceasefire, but obviously with fears of recession, that's going to hold, obviously, prices and any growth down. But so, Stu, where are you at with the recession? Is it coming? Should we be worried? Should we not be worried? What do you think?
With Doge pulling out as much printed money as they can, that is a naturally occurring thing that will help inflation. Getting chickens to rebreeding and everything else, egg prices will come down naturally as long as they don't kill them. I think that if there is a recession, it was teed up by the Biden administration's overprinting of money. I think that I like what I'm seeing with Chris Wright, Lee Zeldin, and Doug Burgum on all of the energy policies. I think we will see lower prices. Will we hit President Trump by saying we were going to have half the prices? I think in the red states, we will come close. In the blue states, rot's a ruck.
Yeah, absolutely, absolutely. The only other thing I saw yesterday, so we have to talk about this. Scott Sheffield on CNBC. Wild? Now we can't play the video because YouTube will take it down. You won't be able to watch it. We'll lose the 30 cents or whatever that we get per video. So would we guys, we're on a slim budget here. We had all we can take, but basically he goes on. Scott Sheffield goes at a CNBC interview there at CERAWeek. Okay, he joins Power Lunch. And the quote, Stu, is unbelievable. I'll give you, basically the quote was, at Pioneer, we realized we were out of tier 1 inventory and close to being out of tier 2 inventory. He goes on to say tier 1 inventory will be done by 2028 and they'll be out of tier 2 inventory by 2032. What? Unbelievable. This is from the same guy that 4 years ago was quoted as saying Pioneer had 100 years of inventory. Oh, how the turntables. This guy just nuked all over Exxon stock. I mean, it's pretty funny. I mean, throw out, whether or not he's right or wrong. This is a revenge play for him, in my opinion. This is him looking at ExxonMobil and saying, oh, you don't want to stand up to, for me when I'm getting left off your board, when the FTC is coming after me unfairly? Well, guess what? I'm going to go tell everybody your $63 billion acquisition was for 4 years of inventory.
Wow.
And then
that's an interesting
take on
the
tier 2 stuff, which sucks because, trust me, there's a reason why it's called tier 2 and not tier 1. It's because it's off the beaten path. Oh, you've only got bad stuff until 2032, and then you're absolutely cooked. I was shocked when I read this, Stu.
there is a huge reason that there is a gigantic push for the Gulf of America drilling right now. Huge.
But what's that got to do? Yeah, because Exxon realizes they got fleeced with Pioneer. I mean, is this the new XTO?
Could be, but what I'm saying
Unbelievable.
is that the amount of drilling activity, rigs, seismic activity, and everything going on in the Gulf is just going nuts.
I mean, that's like me coming out and saying with this show, we've only got about 2 years left of good shows, and then it's gonna fall off a cliff.
Yeah, Ruts of Ruck finding a sponsor at that point.
Yeah, exactly. It's gonna be rough finding people to pay. It's just unbelievable. No, we've got 100 years of good shows left.
Yeah, we got 2 million people listen to us already. So we have 8.5 million transcripts read. We're
Now,
good for
on the
another
other
15
hand,
minutes.
I
Yeah.
think what Scott Sheffield said was the quiet part out loud, was that there's not as much great inventory left as people thought. And without some technological change, without some new innovation, without something that is a complete game changer like horizontal drilling or the modern frac, it's going to be hard to find more shale oil. Now, I tend to fall in the camp of low prices and low margins leads to innovation.
Right.
There's the idea of creative destructionism, that industries, when they tend to die out, new people come in and find ways to revive them and increase those margins because now there's opportunity to do so. But this doesn't bode well for anybody trying to sell right now. I mean, he really did a number on the M&A markets right now. I mean, Double Eagle and the boys over there must be thanking their financial advisors for making them sell out when they did, because if they were in the midst of negotiations right now, everybody would be reevaluating every deal that's in process right now. They're basically, it's DEFCON 1 in these war rooms of them trying to convince their buyers. No, I promise you, we've still got 10 years of inventory. I mean, it's unbelievable.
Right. But that still puts more importance on Alaska and the Pennsylvania area in the Marcellus and those kind of areas. I'm of the aspect that there is plenty of oil out there. It's all financially whether or not it's accessible or permittable, but we are still short $4 trillion of regular CapEx investment in order to maintain normal decline curves, Michael. I'm bullish on oil.
Yeah, I'm not as bullish as you. I would be hard pressed to see $80 oil this year. I don't think we will. And I think we're going to have to learn to live in a lower price environment, which the oil industry can. I think you're going to see a swing back from 4-mile horizontal, triple fracked wells to something that's a little bit more conservative plays that I think you'll see conventional oil come back into swing a little bit. One of the things I love that we're doing with Pecos is that we've always lived in the conventional vertical space, meaning we're set up for times like this. But it's pretty unbelievable. So
And we like 32% returns, by the way. Just thought I'd share that.
Yeah, great return.